I love when the good news coming in on a day-to-day. Already know what's happening, I don't gotta shake the hay. Big moves, big stepper in the right direction. The trip continues, every W's a psychedelic. Journey over accolades, divvy up the accolades and tell them boys to have a day. Give and take, and I let it get.
All right, Ryan Garland here, founder and chairman of Paradyme. I'm honored today to be able to have Jordan Belfort here. We're going to do a podcast to kind of share with you guys a little bit about, what it is I'm diving into, get his ideas on, our investment strategy, but just kind of start from scratch and see where this ends up taking us, to be honest with you. So this is exciting. So Jordan, thank you very much for having me.
My pleasure.
I really, really appreciate it. All right, so to kind of dive in, let's talk a little bit about your history and kind of where you were raised and, just kind of give a little background on yourself before you kind of ended up where you are today.
Yeah, so I was born in New York City, at one of the suburbs, Queens, Bayside. I grew up in an interesting family in the sense that we were like a lower middle class, right? But my parents were highly educated, brilliant, hardworking, and broke. Like, they're professionals. They're both CPAs. And I'm like, what the fuck? Like, it didn't take long. I was probably under 10 years old. I'm like, I just think my parents should be making more money because, they're really smart, educated, hardworking people. And there were some things that, I think I probably came a bit later, what was causing them to sort of struggle financially. But it didn't take long to start linking up that there were a couple of things missing from their own life strategy. And one of them is they were completely risk averse. They were depression era mentality. They refused to even buy a place. They rented an apartment. And back then you could have bought a house for $5,000 back in, when they were looking for houses, right? But they just never took risk. And they also were really anti-sales and marketing. Yeah. So, like, for example, they're both CPAs, right? And as a CPA, you can work for someone else and get a wage, or you can also, do people's taxes and books, on the side and make extra. And, my parents could have made a lot of money doing that, but never did because they thought that the idea of putting their services out there and soliciting in some way was, if not evil, simply not ethical, right? So what did they do? They worked for other people and they got paid a wage. And eventually, as I got older, my early teens, I was always entrepreneurial with paper routes and shoveling driveways at the snowstorms. And I did everything, all sorts of odd jobs, magic shows I did. But I hit it big for the first time when I was 16, selling ices on the beach. And I went down there with one cool the first day and sold it out. And no one was doing it back then. I had this
regular ice
cream,
gotcha.
And ices and Italian ices and chipwiches and fudgicles, frozen fruit bars, Milky Way Snickers with dry ice on top and a styrofoam cooler. And I came up with the idea because I was on the beach. It was Jones Beach in New York, which is massive. On a hot summer sunny day, there's 1 million people on the beach, right? And everyone's bitching and moaning because I have to take this long walk to the concession, which was a solid 300 yards away. It was not close, or 200 yards away, right? So I'm like, I wonder what would happen if I just, loaded up a cooler with ice cream and stuff and went down to the beach. And sure enough, I sold it out the first day and I made, I think it was $120 in 1 hour. Okay.
How awesome.
And what
year was that?
That was 1978.
Wow.
Now, just to give you some context here, right? I'm old, right? So next day I went back with 4 coolers and sold those out and made almost $500. So on today's dollars, $500 it's probably like $2,000 in a day, right? Mm-hmm. It was a massive sum, at least $1,000 more than that, like $1,500, right? And that first summer, I made $26,000. It was more than my parents were making. It was more than anyone my neighbor's parents were making. It was a shit ton of money, right? Next summer, I went back and made $50,000 by having 3 kids walk behind me selling costume jewelry, and so I did all that stuff as a kid, right? And I think my upbringing really just showed. I realized that if you want to go out there and be successful, you're not going to really do it by working for someone else for a wage. Sure. Maybe the one exception to that is if you're in the investment world and you get a job at a really great investment bank like a Goldman or one of the others, JP Morgan. I guess you can make millions of dollars.
But it does take time.
But it takes time. But because in that situation, you're leveraging off of a huge capital base they have. So there are advantages and the brand equity behind those investment banks. But generally speaking, it's very difficult to become wealthy, truly wealthy, working for a salary.
Yeah, no, absolutely. And it's kind of cool that you're going down that road because When you ended up kind of moving into Wall Street, you dove into sales, which is completely opposite. And then the way your mom and dad kind of looked at
I think
scaling their business.
Well, I think that, you know, when it comes to beliefs about life and taking action and, you know, what's right, what's wrong, either you end up adopting sets of beliefs that are very much like your own parents or the exact opposite. You know, I went the exact opposite way. So to me, you know, I embraced it, and also I was good at it naturally. So I think that, you know, you try something and it works for you. You're naturally great at it and it feels good. So you do it more, and then you start to practice, and maybe you read a couple of books about it back then. Now you go on the internet, right? But for me, I was a natural born salesperson, and it felt great, you know, just, and also the hustle of, I think, you know, all these early experiences I had, whether it was like, you know, knocking on doors to expand my paper out, you know, putting an ad in the paper to do magic shows when I was 13, shoveling driveways, knocking on strangers' doors when I was 11 years old, right? Ultimately, the beach, which was just literally hard work, entrepreneurial stuff, right? But I linked up. I'm like, you know, if I work really fucking hard and I do it for myself, if I'm my own boss, I'm going to make a fortune. Versus getting a job at the catering company for $1.13 an hour, which is what my friends were doing, right? Which is like insane, making $40, $1.13 an hour is making $150 an hour.
Yeah.
So like, how do you compare the two? So you know, so by the time I emerged from graduate from college, you know, I think it was cemented in my belief systems that, you know, I need to work for myself, be my own boss. I need to get rich like that, as opposed to the way that, like, when I was growing up. I don't know if this is so much a thing now, but when I was growing up in the 70s and 80s in public school and high school and stuff, it was like the path to wealth is get a good job, go work at a big company, you know, work your way up the corporate ladder. You know, you're going to have a pension when you retire, and they'll give you a nice gold fucking watch, and you'll save a little money in your IRA, and all that will be enough, including your Social Security, to live a nice, happy retirement. And the fact is, not in this day and age, it's probably enough to pay for your diapers when you're in a nursing home, if that, right?
Yeah.
You know, so it's not really a path to success or wealth. I don't think it ever was. I think it was a big lie for most people. Not to say that, listen, that the world is mostly consists of people that work for others, and that's fine. There's nothing wrong with that.
Right.
But if you do that and you desire to be wealthy, you're going to have to take the money that you save and put it to work, whether it's in real estate, which is a very good way to get rich on the side. You need to have some side, I don't want to call it a side hustle, I think that demeans it, but multiple streams of income, whether investing in the stock market wisely, investing in real estate, maybe even a side business, a franchise that you, whatever it might be. So I think that you can certainly succeed working for someone else. Nothing wrong with that. But if your desire to be really wealthy, well, probably not the best path.
You know, and I think it's so much easier to scale and open up a business, even if you have a W-2 job, to be able to go out and find another, in essence, side hustle. But whether it's, like you said, a franchise, invest into stocks or real estate, what have you, I feel like with the internet and data, and you can pretty much find pretty good investments if you do your research.
No doubt.
Everything's at your fingertips for the most part, much more now than it was back in your era when you were investing.
Right. So I mean, the answer to that is 100% true. However, on the flip side, though, you need to be very careful, because there's a lot of shit and bear traps on the internet and a lot of bad advice. So if, you know, you go on Instagram or TikTok and you know these charlatans, take these these coins are going to moon, or, you know, this is the next great hot stock. It's fucking nonsense. People don't know what they're doing. The only people that get rich from that are the people that are giving the advice. And even worse is Jim Cramer on CNBC. If you follow Jim Cramer, you'll end up with financial whiplash. The guy changes his mind like the fucking wind blows, right? So, I mean, like, there's a lot of, what you're saying is 100% true. The ability to succeed right now, I think, is greater than it's ever been. And all the information you need to succeed is out there.
Yeah.
The question is, how do you filter out the bad information from the good information?
Yeah.
And how do you get to the real stuff versus all the bullshit?
Let me ask you this. That's perfect segue into this, because that's really one of the questions I want to ask you anyways. What would be, you know, what if you were to look at an investment firm that you want to invest into? Let's say you're just looking at the internet. You're like, oh, I want to invest in stocks, invest in real estate, whatever. Something pops up on a Google search, right? And you start looking them up. What would be the determining factor for you to want to look into them further? And what would be kind of an ideal, in essence, firm structure?
Sure. So let's separate it out from like this. So like, is real estate, which is a very unique thing into itself. It's a separate asset class, right? So let's put that to the side.
Sure.
Then let's talk about equities, stock investments, investing in bonds or whatever, right? Small cap, big cap. I just actually wrote this book. You see this book right here? It's called The Wolf of Investing. I just wrote it. I'm here to promote my book, but I just wrote this book. It was a bestseller, right? It still is. And when it comes to investing in the stock market, it's so stupid simple to make money in the stock market. And the reason for that is all you have to do is go and buy the fucking S&P 500 and hold it.
Yeah.
Like the best investment in equities. If you're investing in the stock market, which should be a very large portion of your investments, okay, trying to pick individual stocks, trying to time the market is a sucker's game.
Sure.
Some people can make money, very few. By and large, unless you're a professional investor, and by the way, even all these professional investors, now, if you're a professional investor working for yourself, you got a shot if you're really, really good. Most people can't beat the S&P on a consistent basis. But if you're looking to give your money to a money manager who's going to charge you 2% management fee, 20% of the profits, expenses on the fund, it's the ultimate sucker's game.
Yeah.
Because after you deduct the fees and commissions and everything else and the trading fees and the tax inefficiencies that come from that, because when someone is managing your money, they have to show activity, but they can't just buy and hold. You say, well, what the fuck am I paying you for if you're just buying the S&P and holding it, right?
Right.
So that's why I would strongly advise, and all the data is there to support this. Every study that's been done in the last 75 to 100 years, that's in studies, like academic studies, right? The best investment in equities is simply to buy the S&P, hold it, reinvest your dividends, and then make frequent contributions and use long-term compounding to do the heavy lifting for you. That's the stock market. So like anything else to me, it's like, it's odd that Wall Street, like, or say financial services like stocks, they don't add value. It's like everything else you do. Like you're going to go buy real estate, right? You better have someone who knows fucking real estate advising you, or you're going to get your head handed to you. You will. There's a million things to know, a lot of variations, when to buy, what to look out for, what areas is very, if I was, I'm not an expert in real estate myself. If I was going to go out and invest in lots of real estate, I'd bring in an expert to be my partner, right? That's smart. Same way if my pipes broke in my house and I had a leak in my house and the flooding, I'd call a professional plumber and pay his fee to fix my pipes. If my electricity shorted out, I wouldn't try to fix my own electricity. I'd probably kill myself, electrocution, right? I'd call an electrician, right, who would know how to do it, and I get a better result. Right? Same things with medical care. If I'm sick and I have to get my appendix out, I'm not going to operate on myself. Hey, bro, you mind operating on me, Ryan? No. Call a fucking doctor who's licensed and expert,
right,
who's going to do a good job, right? And I'll pay his fee. So we go through life, and this is the trap, and we've been trained and properly and rightfully so to seek out experts, to find experts, to get the best results possible on the things that we need to accomplish.
Right.
The one exception to that is fucking Wall Street. They don't add value. They do not add value in the sense that if you hire an expert to manage your money, you're not going to get as good a result as if you just put it into an S&P 500 index fund and hold it. That's been proven over time. And here's the thing. You have a few amazingly successful money managers, right, that can beat the S&P. There are a few, very few, but there are a handful of rock stars. Guess what? They're not taking your money. You can't give them. They're not accepting money from people like you or me, for that matter. They're not accepting money from anybody. They're trading their own money and maybe a few multi-billionaires, right? But they're not going to go out there and take money from the average person. But then the rest of the hedge fund managers are bathing in the afterglow of these rock stars. So people are like, oh my God, the hedge fund. No, they're mostly fucking subpar performers and this has been proven again many, many times over. So that's stocks. I just simply, and that's what I wrote this book about like it explains to you really in detail how you go about building a world-class portfolio without having to hire a money manager who's going to charge you fees and rape you and put you into short-term trading things, right? That's a sucker's game, right?
Sure.
Now, that's not to say that Wall Street doesn't create massive value. They do. The public offerings, they finance companies, they finance debt, they make the financials to go. So this is how you extract the value, your share of the value that Wall Street creates, but don't get caught up in their sucker's game and let them manage your money, right?
Sure.
But now you move on to real estate, very different, because I think real estate's an amazing asset class. I have so many friends of mine who've gotten super rich on real estate. It's one of the great ways to accumulate massive wealth, right? A lot of tax advantages as well, right? So in that case, very different. Now you're back into hiring an expert is a very smart thing to do until you know enough yourself and you can find your own properties and whatnot. So I think real estate is a phenomenal way to build wealth.
Most of my investors currently, they want to, in essence, they're high touch. They don't want to just give it to a manager and let them manage their capital, right? As far as like stocks and so forth, right? So what I'm seeing though is that a lot of my investors are baby boomers and they believe in real estate. They want to be kind of high touch. They wanted like some liquidity,
right?
Short-term investments. They don't want to be in a fund for too long or in one deal for too long. And if so, then at least they have some sort of liquidity event and they can get some principal back, some sort of dividends. But what I'm seeing though right now in this current market, that a lot of investors really don't really know what to get into, right? So they're like, well, we're a little more comfortable in real estate. We don't know much about stock. We definitely don't know much about crypto.
Right.
Seems like a lot of my clientele are really leaning more towards real estate because it's something that inflation, it's always been real estate when you have a recession. So I feel like a lot of people have a lot of fear and they're going, well, okay, I'm going to pull back. Everyone's moved to a cash position out of their 401ks, IRAs, stocks. Everyone's pulling money out, looking for tax advantages as well, going, hey, I'm going to go into real estate. What are your thoughts on that? Do you think that's kind of, are you seeing that happening right now as well?
Well, I think that you have to look at it in more of a percentage term. So I would find it odd that a truly wealthy person, let's say with a net worth of over $100 million, they're going to have money in the stock market.
Oh, for sure.
So it's not like they're going to say, I'm selling all my stocks, I'm going to sit in cash. No one sits in cash.
Sure.
Because if you sit in cash, you're just getting destroyed because of inflation, right? So when you talk about like people saying, well, I'd rather be in real estate, I would say, yeah, that makes sense. But it's like, so let's say normally they'd have 10% of their cash in real estate or 20, whatever that number they feel comfortable with. Maybe they'd move that to 30 or 40%.
Right.
But it wouldn't be, I couldn't imagine a very smart investor saying, I'm taking all my money out of the stock market, all my money out of the bond market. I'm going to sit in cash and try to deploy in property. That makes no sense. What you would do is you would weight your portfolio more heavily towards real estate, but you certainly wouldn't concentrate in one asset class. It doesn't make any sense. And especially because you want to have some capital gains as well to offset some gains to offset with tax deductions from real estate as well. So I think it would be the rare person who would say I'm out of everything. I mean, sitting in cash is just nonsensical. At least, right? And that means
if they're going to move to cash, they're already they're eyeing another investment. But they're looking at like either some sort of, deferred sales trust, or they're looking at some sort of tax advantage or tax benefit to move money out because they're going into some sort of taxable event.
Right.
But they're going to go, okay, I just want. So you're right. A lot of people are going into 30%, even 40% of their portfolio, but they still want to be diversified. So they're not going to put all their money in one deal.
Sure.
They're going to diversify maybe, geographically, different asset classes, apartments, single family, what have you, right?
I mean, I think that right now, and again, it's always like about when you're looking to allocate money, right? Diversification is always a good thing.
Yeah.
It really is. I mean, I guess there's an argument made, well, there are some schools of thought against them, but generally speaking, diversification is very smart, right? So I think that you'd find that people that were, more frightened of the market right now, they would just simply reduce their exposure, but not eliminate their exposure. Right. And also like that whole thing also goes against smart investing, meaning like if someone said to me, where do you think the S&P is going to go this year? I don't know. The S&P last year was up 25% last year. I wrote the book 2 years ago. It came out last year. I looked like a genius. Like, oh my God. I said, put your money in the S&P up. But that's bullshit. Like, I didn't know the S&P.
It was luck.
Well, no, it's just simply, the S&P goes up on average 10.5% a year.
Right.
Some years it goes down, some years it goes up 25%.
But overall.
How do you know which is going to be the good year or bad? You don't fucking know.
Right.
So you have to hold for the long term. So so it's very difficult to try to say, well, I'm getting nervous about the stock market right now. Well, guess what? If you're nervous about the stock market, it means it's probably going up. Like most of the time, people are wrong. People have the worst fucking timing.
Sure.
Okay. Generally speaking, when everyone is scared of the stock market, it's when it's probably about to roar and go higher. When everyone thinks the stock market's, oh my God, market's so hot, it's great, it's when it's about to go down. That's just broadly speaking. So I just think that human beings, by and large, are really bad stock pickers. They're really bad at timing. That you let your emotions rule when you're going to buy or sell. I think a far better strategy is like simply buy it, hold it, and just don't even fucking look at it, and be in a position where you have where the amount you have exposed, you can pass what I call the sleep test. Can you sleep at night? If the market goes down 25% one year, Are you going to be in panic? Oh my God, no, whatever. I got my bonds. I have real estate as well. So it's really all about, what percentage in your asset allocation makes sense. Now, yeah, I mean, if they're going to start weighting heavily towards real estate, that's great. I think it's smart. But, right now, and again, it goes into timing, but I think this is pretty poignant, is like, I think there's major fundamental issues right now with commercial real estate. I think
certain
that
assets, yeah.
I think there's some asset classes that are in trouble right now, and for a number of reasons. One is that a lot of the loans that were taken out when interest rates were low coming up in the next starting next few months and then up for the next 18 months. I think there's a lot of money that's going to be their balloon, their 5-year loans, whatever they were, right? And interest rates are now much, much higher than they were. Those properties suddenly are going to be upside down cash flow wise when the rent roll is not going to cover the payment anymore, and a lot of these people are going to default or walk away from their properties. That's one aspect of commercial real estate, and even worse, I think, or equally problematic, is this shift that we have right now of people no longer working in offices, which is still, even myself, which I was like, I hated this idea of virtual. You can't deny the savings from virtual employees, right. and they, once you learn how to manage them, they can be very productive. Now, it's obviously there's major advantages to having people in the same place, and some companies are making people come back to work, but there's still it's a trend. Yeah. Towards virtual, and that's reducing the need for office space and whatnot. I think those two things combined are making it very, very problematic.
Well, so we're seeing two things. So I think I was sharing with you before, I manage a $100 million debt fund, and that debt fund's for first trust deed mortgages, short-term loans, in and out, ground up construction, fix and flips. What was happening with like small regional banks are they're lending money to guys that are building homes, tearing down houses, doing ground up construction, fix and flips, what have you, or even larger commercial, multifamily, pick a number, $50 million, $100 million projects. The biggest issue is when, let's say when the rates were low, you borrowed money at 6.5%, 7% for a construction loan. When interest rates spike like that, the bank typically has a line of credit that they're going to release the draws for construction to the borrower as they are finishing each phase. Right. The issue is that all of those lines of credit are typically on a floating rate line of credit.
Variable.
So as those
they're not
rates,
fixed, they're variable.
Right.
Yeah.
So as rates climbed,
the cost of building gets higher.
Well, not only the cost of money went up.
Well,
so what happened
is
the
cost of building, right? Yeah.
So that now the line of credit for the bank has gone above and beyond what the note rate is that they gave to the borrower.
Yeah.
So now as the borrowers borrow, asking for a draw, the bank is going to issue them a draw for the construction, and the cost went up for the capital for the bank, and now they're saying we don't have any money to release.
Yeah.
That's a big issue right now, especially with smaller regional banks or even some other private lenders. They would lean on a line of credit or some sort of facility. They were issuing loans 2-3 years ago for 6.5%, 7%, and now interest rates spike up to 10, 11% to be able to even keep that fund at par. Right. So now that cost of capital went through the roof, and as they draw, they're upside down. Where are they going to make their money? Yeah. So a lot of issues are broken projects. So you have a lot of, in essence, distressed assets. It's just you're not seeing it on the news.
Right.
And then you have a lot of smart investors that went through the 2008 crash and lost everything, or going, hey, I'm going to a cash position. I'm going to wait until I identify some assets.
Sure.
But they've already figured that out. Right.
That was a move. There's no doubt that if there's going to be a massive, problem in commercial real estate, it also creates a massive opportunity in commercial real estate, right? Because it just means that, those properties no longer make sense at that price. And if people stop paying their loans and those properties, get foreclosed on, they go back on the market, prices will come down, and you'll be able to scoop up these properties at prices that where it makes sense in the new paradigm, right? That's the idea.
Absolutely.
In your company.
Good one. I don't think you even thought about that. But yeah, so that's one issue there. And then we headquartered out of Nashville, and there was a lot of office. Like Amazon was building, I think, like a 2 million square foot office building, and they closed about 50% down and went to multifamily. So you're seeing a lot of office convert to multifamily. And so a lot of banks are offloading those assets for, 75, 80 cents on the dollar because they're in default.
Right.
So you have kind of guys that are in the multifamily world going, hey, we're going to go do a value add deal. We'll pick this up for pennies on the dollar in essence, and we'll just convert it into multifamily and stick people in there. But that's still a hard pill depending on your location. You need to be in high dense areas more than anything, and you need to be able to get in the right price and still consider some sort of rate adjustment and or rent adjustment and have rents come down a little bit. I think a lot of people are expecting that rents are going to continue to go up. Some data does show that, but it's usually the mass migration areas. You know, people going into certain areas in Texas or Tennessee or Florida, that those rents will still increase because of demand.
Right.
But if that demand's not there because office is slowed down and not a lot of people want to drive into the city, that can be an issue.
Right.
So you got to be careful on what your rents are going to be.
Yeah, I mean, I think these are all like the things that, you know, would trip up a novice, which is why you really need to be advised, you know, prudently by someone that really knows the business, not just someone who's like read a book on how to get rich in real estate.
Totally. Yeah. And that's the thing. And I think for the most part, you know, I think there's certain data points that show that we're going to have a soft landing. I don't see that. I'm actually I'd rather be safe than sorry. Kind of like I'd rather be prepared than not prepared, because in 2008 I literally lost everything. So I kind of have a different perspective. I'm a little more conservative in my approach. I'm looking at more of long-term plays, like you and I were talking about: land acquisition, entitlements, planning, design, sell to builders, that type of stuff. But that's also good because, God forbid, if something happens, we go to war, market crashes, I own land. I just have to hang on to the land.
Well, man, I think a big issue, you know, anything, whether it's real estate, stocks, crypto, whatever, is leverage, is you know, your exposure in terms of how much leverage you're putting into your portfolio. So at the end of the day, the people, like if you would have went through the whole financial crisis in 2008 and weren't leveraged, you came out great. Things bounced back and made new highs. But if you were in a position where you couldn't maintain the debt, right, you're just in a position where you're upside down and the cash flow is hugely negative and you're over leveraged, well, you're fucked. So I think that the lesson, you know, I've always learned is that, you know, leverage is a double-edged sword. It's great on the way up, but not so good on the way down. And if you have leverage, you need to make sure you also have, you know, sufficient cash flow coming in from multiple sources to make sure that you can, you know, service the debt.
Good builders, good developers are looking for non-recourse loans, right? Because what they went through in 08. But not all banks, especially in this market, are giving non-recourse. It's full guarantees, plus encumber other assets and so forth. So that's where we are looking at just things a little more conservative. When you see bottlenecks like that in the market, in the debt space, you can kind of start seeing there's some guys that are moving a lot of money around that are kind of they're seeing things that we're not seeing too.
So what do you think are the best areas right now in terms of, like, you know, if you were looking for raw land or, you know, for apartments that had been foreclosed on, or, you know, multifamilies?
So you'll dig this. This is our forte. So we're the largest man cave developers now in the country. So we basically build man caves for millionaires. Guys who want to put their cars in there, boats, RVs. I just saw
this like online. I think it was on Instagram, a post about man caves, you know?
It probably was us.
Yeah.
But yeah, so basically we're the largest man cave developer now.
What's the cost to build a man cave?
So all of ours are all steel buildings, but like one of our largest ones right now are 28 by 60 feet deep. Okay, so 28 feet wide, 60 feet deep. I'll show you some pictures afterwards. But we're building those for $89 a foot, and we're selling
underground.
Yeah,
I mean,
so
not building here because it's underground and
No.
underwater.
This isn't. We have most of our developments right now in Arizona. So Lake Havasu, Arizona. We're looking at stuff in Lake of Ozarks. We have stuff going up in Austin, Texas, and then we're looking at stuff that's going to be outside Nashville, not Cherokee Lake, but Old Hickory. So we're looking at building there as well.
So what's the cost to build a man cave, like a world-class man cave?
Right now, our cost is $89 a foot. Now, everything's going to be a little different. Depends on how luxury we want to go, considering who our end users or end buyers are going to be. Right now, with acquisition, planning, design, entitlements, the whole thing, I'm at $89 a foot, but I'm selling these for $175 a foot. So for my investors, they love it, and we're doing it in cash. We don't do any debt leverage. So I'm building them in phases. So I'll use this as an example. Right now, I'm sliding into phase 4, but I'm in phase 3 of a project right now in Lake Havasu. 225,000 square feet. First phase, we sold out at $175 a foot. We thought we were going to sell them at $145 a foot. 36 units gone before we even had our certificate of occupancy. So that just kind of gave you an idea in demand. But we also went up a lot higher in our cost. As far as sales price. So there was actually $6.5 million more in profit than we expected. So that was great to be that conservative.
What was the total?
So total capital stack on that, our total cost to build on that's $28 million, but I only raised $9 million, and that $9 million is only going into acquisition, planning.
Rest for pre-sales and stuff?
Yeah, and once I sell each unit, just like home builders, you sell each phase, you rotate that capital into the next phase, same concept. But we're not doing it with debt. And the reason why we're able to make it so profitable is not only the demand for the asset and location. You have so many people coming out of California, and it's a huge retirement community. And you have a lot of, it's kind of a Palm Springs, Palm Desert kind of area, right? Just kind of a couple hours from there. So you have a lot of snowbirds that want to go there and get away from the cold. So it really is a year-round location for people just to go out, razors, go outside, go shoot, whatever you want to do. But
getting back to, so explain, define a man cave.
Okay, so think of...
I'm intrigued,
Yeah, so I have guys that are building like golf simulators in there, guys who have high-end old cars, guys who have like high-end luxury cars right now.
Yeah.
I have a guy right now that's building sleds and putting high-end cars on the wall. You know what I'm talking about? Where they come and move them.
Yeah.
So you have that guys who like to tinker and build stuff. They'll have a whole shop in there with lifts.
It's like a sign, no women allowed outside. Basically, right?
Yeah, you have mezzanines. You have guys that are actually putting like cigar lounges in there, and literally the list goes on. And think about a box that you just want to make your own and just man cave it. TVs everywhere, whatever you want to do. A lot of guys are using them as their offices too.
I go throughout my life. I've had all of these things in different points. Like I've tried, like I had the golf simulator. I had all the TVs on the wall. I have the cigar room. I've had little elements of man caves throughout, like different my houses throughout the years. But I never really had a dedicated man cave.
So you'll like this. So on my phase one, I tell everybody the story.
A quaalude room where you have rubber on the wall so you can bounce off the walls.
Right? I told you I brought my boat. I was going to bring some quaaludes with me. Okay, so
if you have any, we'll do some right now.
You can't find those anymore, right?
Exactly. Thank God.
Yeah, right.
I'm sober for like 27 years, but I do one right now if you have one.
I think the first time we met, you were like, I have been so clean for so long, and I'm going to stay right here.
Yeah.
That's cool.
But I do a quaalude though.
All right, so think of it this way. So I have guys right now that are actually buying them side by side and tearing down the middle wall because they're friends, and so they want to open up and have one big shop. I had in my first phase, I looked at all my buyers on my first phase, like as far as like on my purchase contracts, and I'd say probably 40% of them were women, and some of them are friends of mine.
Really?
Older husband, wife. I called one of them and I said, hey, why did you buy this huge man cave? In essence, it's really just a big storage unit, right? For boats and RVs, and people store all kinds of stuff in there. And she goes, well, Ryan, we retired, and my husband and I haven't lived in the same house all the time together
And he's driving me fucking crazy.
Driving me fucking nuts.
Yeah.
And so I need to get him out of the house and get my garage back.
That's smart. It's a very smart woman.
So these women are literally shoveling their husbands off to their own man
sleep
cave.
in there as well as you. Right?
And so that's going to lead me into this. So what's kind of cool is that not only do people kind of go there and tinker, it's a community. And you have a garage up. That's kind of your invite for everybody else that's in the community. 225 units of guys that have $1 million coaches and RVs. Some of them. I got one guy does off-road like Baja truck racing. He's like one of the top guys. He's selling these things for $1 million bucks. He's building these things in there. You got guys that build high-end marine motors that are doing offshore racing. Stuff that you see out here all the time. You have some pretty cool owners. So these guys are all motorheads or what have you, and they all kind of open up their garages and invite each other in and spend some time together. And I think that's really healthy too, because I'm big into men's mental health. That's like my thing. So I love that community feel. But I want to ask you something.
Sure.
So I'm gonna go into my finance structure, and because you're so good at this, I want to see what your thoughts are.
Okay.
But what we did was, and before I go into that, so these units, my broker comes to me and says, hey, about 60% of our inquiries we're looking for financing because you can't finance these. Well, now we do. We figured out how to do it, but you couldn't finance them because you don't have residential tied to it either. So it's, in essence, it's an industrial building.
Just put it on your property, though, right?
Yeah. So you own the unit.
I guess you'd finance it with a home equity loan or something.
That's where people do it. So a lot of people are getting a home equity line and then just using that out of their home and buying them, because some of these units are only $300,000, right? So it depends on what you want to put into them and air conditioning, what have you. But yeah, so they're not very expensive. So most people can find the cash to buy these. But what happened is a lot of people were also inquiring if they can live in them. And we're like, no, we can't. So one of the biggest movements right now are Barndominiums. Have you seen like the design that people are like love moving into a barn. They're kind of like the barn design. Have you seen those?
Yeah.
It's a big movement right now across the country. You know, you can literally go online and find like some sort of barndominium that you can order, go plop it down on some lot somewhere across the country, and people can live in these things. And some of them are 3,000, 5,000 square feet, and they're built like homes.
So you can't live in a man cave because there's no electricity.
No, it's fully.
What
You have
is it?
full plumbing, full electricity. I have guys that are putting
Well,
washers,
what is
dryers.
it?
It's the way it's
There's
zoned.
it's not zoned, so there's no CO.
Correct. Well, you have a certificate of occupancy, but it's just zoned industrial, so you can't. So it's all about entitlements, right? You can re-entitle something, change the zoning. The ones that we were doing is it was just zoned that way, and I was just planning on selling them. So what I did is I learned from some of my buyers. My buyers are saying, hey, Ryan, I want financing, which means if I have an ability to finance, 60% of our inquiries are, can you finance?
Sure.
And a lot of people are asking if you can live in them. So obviously going into building my next ones, I'm going to try to hit that mark because that's an important data point. So I'm like, well, let me see if I can do that. So I'm buying the 18 acres right next to the project I'm building right now. And I'm basically designing the exact same floor plan as my storage units now as far as my man caves. But right above them, I'm actually building apartments, and we're converting them into townhomes, but designed as barndominiums. So in essence, you have your man cave that's 28 by 60. In some cases, they'll be 30 by 85. So they're big. You know, some of these are, almost 3,000 square feet. And then you have, a 1,500 or 2,000 square foot house on top of it, and they're condos. So you can actually finance them and you can live in them. But you can buy these things for $550,000 or $600,000. So you have guys that are going, hey, I want to just be able to come, because this is like kind of the snowbird world.
It's one floor.
It's 2 floors. So you have your big garage underneath, and it's just like a town. Think of like a 3-story townhome or a 2-story townhome, right? You have your living quarters upstairs, and you have your garage underneath.
Right.
So we'll have an elevator. We'll have it all. I mean, it's a full house. So it's all stick built on top, but steel down below, which is actually more desirable for building. And then we're going to, in essence, wrap it all in steel, and it'll design like a barndominium, high pitch roofs, modern finishings. You would never even think about it. So, or how nice these things can turn out. So we're actually building 150 units of those is our next slug. So we're really looking forward to that. But what do you think about that? Do you think that's something that'd be interesting?
Well, I mean, listen, if you're seeing demand for it, I mean, right, if there's a trend towards it, I think financing, if you can get financing
That's
for
the
it,
key.
right, it's going to, let's say, okay, you said you had 60% of your inquiries wanted financing, right?
Correct.
So how many inquiries did you get altogether? I mean,
we've had probably a couple thousand.
Yeah, I mean, it's a huge number of people, right? So yeah, I mean, it should do really, really well.
So if we convert them in townhomes with living space, and you can build them in the right way where you can get insurance, right, like a regular homeowner's policy, then you can finance these through an FHA, conventional mortgage, what have you.
So how many? So okay, so just to visualize it, right? So how big is the house be? How many bedroom house?
So we have 3 different floor plans designed. We may go into a 4th, but you have some that are like 1 bedroom, 1.5 baths. So smaller, like studios, all the way up to 3 bedrooms, 3.5 baths.
Okay.
So they're a little bit larger units. But the largest one we have right now is set up for 1,680 square feet.
The house.
The house.
Okay, and then
just the residential part.
And then below that, you'd have the garage.
You have a whole garage. It's another, let's say by a 28 by 60 is 1,680 square feet. So you can have 1,680 square feet below, and then you have another 1,680 square feet above. But what I'm doing is I'm building a cantilever patio cover, so you have outdoor living space too.
So how would this differ from like just a basement?
So first of all, the cost. Go down, subterranean. It depends on soil and how much you have to put in footings and concrete and all that's going to add up.
Right.
So, but out where I'm building right now,
well,
it's
you can't
flat.
build. There's no basements here in Florida.
No.
Yeah.
In certain areas, it's just not common or normal, but mostly it's
in New
because
York,
of cost.
where I grew up, everyone had a basement.
Yeah. No, out there you don't. So, because it rains 3 inches a year, maybe max out there.
Yeah.
It's just it's not that environment. But yeah, so it's pretty neat to see that.
I love it. I think it's great.
Right?
Yeah.
So I
want a man cave. I mean,
and most people want a man cave. Yeah.
Definitely put a golf simulator in that.
So imagine if you had a man cave that, like, for example, I have a lot of friends and they have family and they all kind of go out there. It's a family oriented environment. So a lot of my friends are going, man, I can buy this for half the price. Because out there, for you to buy a new house, a decent house, you're in $1.5 million, $2 million out there. It's not cheap.
Lake Havasu area.
Lake Havasu area, right?
Where exactly is that?
So you're about 2 hours. You're about 2 hours from Vegas and about 2.5 hours from Phoenix.
Okay.
And you're about, I'd say, 2 hours in from like Coachella, Palm Desert.
How far from LA?
From LA, you're a good 5 hours.
Yeah,
Most of it has to do with traffic. But you go up You basically take the 91 to the 15. Go get to the 91 or 5 or 10. It all kind of parallels, right?
Right.
It goes east-west, and then you hit the 15 and go up through
Got
the
it.
home pass. Like you were going to Vegas. And then you just peel off from Vegas on the 40, and you go out. You go more east.
Got it.
Yeah. So it's about two
Okay.
hours from Vegas. But yeah, but it's a big lake life town. So it's
Everyone's got a boat.
so when the pandemic hit, you could imagine how many people were getting out of California with their families
Right.
to do the recreational thing, and
Right.
it exploded. And not only has it already been exploding because the data's there. So for example, baby boomers, so RVs and boats aren't just single generational, meaning, a lot of baby boomers are the ones that we used to think back in the day that were all buying RVs and boats. It's not that way anymore. You have people that are living in vans now that are, millennials or Gen X or Gen Zs or
Right.
what have you. But so you have multi-generational now that are buying boats and RVs. And so you're seeing a huge uptick in acquisitions there. Then the pandemic, which drove that
Sure.
asset. And then you have people that are going, well, I want to get out of California.
Where were you during the pandemic, by the way?
I was in California.
Where?
So in San Diego area, Temecula.
Yeah, it's fucking. Was San Diego as bad as LA? I was in LA. It was awful.
LA was worse. San Diego wasn't as bad. We were actually in Riverside County. We're about an hour north of downtown San Diego.
Okay.
So we're kind of like LA's here, San Diego's here.
Yeah.
We're kind of inland. We were in Riverside County, and they didn't a lot of people shut down, but they weren't forcing shutdowns.
Yeah,
So
not as
anybody
bad.
wanted to shut down, no problem. But they weren't forcing the shutdowns like they were in LA or San Diego. There was still stuff going on. It was really controversial.
Yeah.
But, we were able to still go to the gym and kind of have a little bit of a life, but it still wasn't normal. So we ended up going out to Havasu every weekend or stay there for a couple weeks at a time, you know?
And what was it like there? It was just totally.
Oh man, it's great. There wasn't a mask in sight. There wasn't one mask in sight. I'm telling you, it was almost like if you go and wear a mask.
like
people are
Florida.
going-
It was like Florida.
Yeah, just like
Miami,
Florida.
yeah.
And that was where I kind of opened my eyes because I was nervous. I mean, I have a family, I was getting nervous on how the PR that was going out and all the stuff that was happening. And I got to a point where I'm like, first of all, from a business perspective, we're all thinking 2008 again, right? So in fact, I was actually about to break ground on Office. I shut that down because I had a big 10,000 square foot office, one story, total like Google Hangout. I had TVs everywhere, super cool. We were racing, it was
Right.
cool. But we had to shut that down. And one time we actually had a curfew. And so I'm going, well, we don't want to have a $20,000, just for the lease for this place. If everyone has to work from home, well, I can start shaving this down. So I started making decisions quick when the pandemic hit because I'm thinking 08 again, and I don't have a lot of leverage. I'm definitely in a different spot, but I didn't want to have so much burn.
Yeah.
You didn't know how bad it was going to go.
Yeah.
You'd never seen anything like this.
Yeah.
So I'm thinking worst case scenario, act now. But what happened is this asset class exploded because now what you're seeing is people don't have one toy. They have multiple toys.
Yeah.
RVs, razors, dirt bikes, couple boats, jet skis, cars. It's just exploded. I have two
Well, I
boats.
mean, when you print money, asset class, fixed assets
That
go up in price. I mean, like,
and that whole SB, what was that business loan or whatever that went on?
PPP. I got a lot of money. I got like over $1 million something.
Did they ever come back to you and ask you to pay it back?
No.
Yeah, well, they asked us to pay it back because we were a financial institution.
No, because I literally, my business was fucking touring and public events. And
Totally different.
I got, my business was literally shut down.
Well,
I got lucky that I pivoted to online stuff for a while.
I saw that.
But I mean, I hated doing it, but I had to because but I literally, my business went from like booming in one day. All my clients, every event canceled like in the same. I was like, the first one was like, bullshit. I mean, what do you mean you're canceling the event? And stop it. Now we got to propose. I'm like, and then within like that day, they started rolling in one by one. I had a lot of employees, but yeah. So for me, it really, I got, I think $1.5 million, plus again the retention money after I got all that. So it was great.
I got that from my employees. That was nice. But the PPP, they asked us to pay it back.
Wow.
Yeah. So what was nice is I was warned that this could happen, so I didn't take a lot.
Yeah.
So I was like, okay, we're not going to take a lot just in case we had to pay it back. And sure enough, they came back to us. And said,
interesting.
You guys were a financial institution.
How much did you take?
I only took 90,000.
Oh, wow.
I was very
and
safe.
They actually came back to you.
Yeah, my burn rate's close to I'm a little over 150,000 a month in just salaries.
Yeah.
So when I got to that, so I was like, you know what? Like, we're doing okay. We have some fluff. Like, again, I just kind of was more conservative. But there was things that were shifting that we can kind of see the market go to. So I'm thinking secondary markets, apartments. I'm thinking like, people need to put a roof over their head. I'm thinking of affordability now, right? And that really kind of shotgunned us into what we're doing now. But then at the same time, I've been going out to Lake Cat. My father retired and lives there, and I've been going out there my entire life. I mean, I don't know anything else as far as vacation with my father. So I've been going out there forever. So as soon as I saw the demand for units out there, and as I had a boat, mini boats, there was a 4-year waiting list for storages. It's insane.
I know.
But not
everything. I remember I came down. I tried to buy a jet ski. I couldn't buy a jet ski.
You have nowhere to store it.
Well, no, they couldn't buy. No jet skis.
They were sold.
Everything was like really weird. Like you couldn't buy a car. The chip short. All this crazy supply chain issues. I never seen it happen before, and it's somewhat sorted itself out now, but still, it's things are still not quite the way they were, before.
And what the problem was is it happened so fast, and I think a lot of people didn't have time, or they just saw again it was free money. Interest rates on cars are 0. Go buy this, but they're paying a premium for that car.
Yeah.
And then you couldn't find any more cars, so you're paying another premium.
Yeah.
I have people that were just max leveraging everything, and they go to trade in a car in right now, a couple of years later, and they're upside down, and now they increase their lease for the next one. And I'm like, yeah. So what I did was I actually went in and bought a house right in July of 2020. I was watching people fear dump. I positioned myself. I was able to strike deals on assets because everybody was fear dumping right before it started. Kind of the real estate market started picking up and everything was doing well. Right before that, I got in and started striking deals.
Yeah, that's great.
So I told my wife, I said, hey, if things go bad, we want to grab our cash, grab everything we can, pay off everything, and just sit tight and just, I could work at Del Taco if I had to, and we'll be fine. I care about putting food on the table for my kids.
Yeah.
So I was literally thinking to that level, like whatever I got to do, I'm going to take care of my family. So we started pivoting. And in fact, I was able to keep all my employees too, because everyone's like, we're in this together. I love you. We're doing it. No, let's go.
Yeah.
So it was nice as the things kind of leveled out and real estate started, picked up. I opened up a couple other departments, started generating multiple revenue streams for the company, which was great. And we just blew up, but it was controlled growth.
Yeah.
I brought on, I moved over to founder and chairman, brought on a CEO from Wall Street, former hedge fund guy, but really loves real estate, wanted to kind of dive into that asset class, knows how to, scale companies. Brought another guy in he was another shop managing $360 billion out of LA. Brought him on as my ops guy.
Right.
Just kind of looking at how can we scale the company and just build more infrastructure and more revenue streams for survival in essence. But not only for us, for our investors. That's key. Right.
So for you came out much stronger after
much stronger.
Yeah.
Well, but it also streamlined us. I think what happened is because we were so diverse. We were like office. I don't know if you ever heard of Europa Village Winery down there in Temecula? It's a $185 million winery. It's a European themed winery. And so they have French, Italian, and Spanish. Anyways, we came in and basically provided all LP capital for all the equity for the development of that project.
Really?
And that project was the only one that was really kind of hit during the pandemic because it was restaurants.
Yeah.
And so, but they figured out how to create other revenue streams, order out, but their alcohol sales went through the roof. Well, that's what happened in 08.
Right.
So when I was underwriting this loan or underwriting this partnership, I went into it and said, well, alcohol sales went through the roof. They're already generating $2.2 million a year in profit.
Right.
I looked at, do you have the capacity to really push a lot more weight? They absolutely did.
Yeah.
So when the pandemic hit, their alcohol sales went through the roof. They went from, it took them 7 years to get like 4,000 memberships as far as wine club memberships. Literally within a year and a half, 2 years after the pandemic, they skyrocketed like 12,000.
Wow.
So that generated a lot more revenue. So it's those little like things inside each asset that we pay attention to going, well, if things get bad, this should generate more capital.
Right.
So it's the diversification aspect for sure. But, it did streamline us. And that streamline was we found a niche. We're building storage units, which aren't that difficult, but people love these things.
Right.
It's kind of right up my age group, what I do, my boat, all that fun stuff. It kind of fits my culture. So these are, I'm building toy storages amongst friends in essence. So I enjoy this.
Right.
And I'm helping a lot of women get their husbands out of the house.
Probably saving a lot of marriages or a little, potential attempted murder charges.
Right.
Yeah.
And with the pandemic, all the nightmare stories we heard, right? So, so it's been a good run. So this next project, we're going to be building about 350,000 square feet. That'll be in regards to not only boat and RV storage, but also the residential component to it. We're going to have a cool gym. Have you ever heard of Lifetime Fitness?
Yeah.
Are you familiar with how they're structured?
No.
Well, I won't go too far into it.
They're in LA, Lifetime Fitness, right?
Yeah, I think originally we're there. And I think they also have a big place out in Denver. For some reason, I thought they were headquartered out of Denver at one point. Or maybe I don't know, something like that. Anyway, so what I love about them is by trade, they were actually multifamily developers. So they build multifamily, but if you ever look at, think about, a Lifetime Fitness, if you can picture like Summerlin in Vegas, for example, or if you look at all those apartments around them, a lot of times they'll either be the ones that build those apartments around them, and then they build the Lifetime Fitness as the amenity package for those apartments. So think about it. You go to an apartment project right now. Do you really want to go to the gym, like a real gym in that apartment? Probably not. Yeah. Right. Because it's just doesn't have all the stuff. They're just trying to, it's just an amenity to get tenants in there, but no one ever really uses it. It's not good enough, Right. So what they were smart was that they're like, look, we'll buy land and we'll do a private equity play. We'll separate this gym and we'll go build apartments and we'll maximize the space that we can build units and then give a discount for those tenants to go to the Lifetime Fitness, because the Lifetime Fitness has everything. Right. And that's what they did. So, and then now they have a proven track record to say, okay, well, if I have 1,000 units around this apartment, I can guarantee, in essence, through our data and all these other projects we've built, that we can put in, we'll have, 40% of members right out the gate. So it's like, cash flow. So if you're going to get debt financing for the construction of the gym, you have guaranteed income because you have a proven track record. So that's how these guys were operating. Well, we're doing, for the most part, the similar thing. We're building the community, right? So you have 150 units of townhomes. Barn caves is what we're calling them, right? Man caves. But we're slivering off a parcel and putting the gym there. And the reason I'm doing that is because if I put the gym in there, now mind you, I care about trying to create an affordability component for my buyers, my owners. If I have, like, out there in Havasu, people drink and party and get, smashed out in the heat. It's 120 degrees. It's like Vegas out by the pool. These guys are just getting lit, right? So the insurance that it's going to take for me to get for, the HOAs for that pool and to maintain that pool is so high that my HOA costs go through the roof per unit. So what I did was I said, well, I need to figure out a way to bring my HOA costs down. Nobody wants to pay $350,000 or $350 a month for an HOA. For example, my HOAs are $300 a month, but I live in a $2.5 million house, in Riverside County, right? So how am I going to have somebody live in a $550,000 house with $350 HOA? It just doesn't make sense, and everybody hates HOAs out there. So I got to figure something out. So if I carve out that gym, I take the budget that I was going to use to build the gym out and put all the TIs in there and just build the shell bigger and bring in a big gym, and they just lease it from me. Then I just remove, and they maintain everything, the pool, the cost, everything. So I just removed that cost from my unit owners as from the HOAs. And then that creates cash flow. So that's what we're doing as well. So ultimately what happens is my cost to develop the whole project's the same, but my HOA costs come down significantly. We generate more cash flow because we have a large national tenant in essence, right? And now we're providing that, in essence, savings back to our homeowners. Right. And now I can even increase the sales price if I wanted to. So ultimately there's more profit, and my investors are pumped about that whole entire structure. So we're planning on plopping these down kind of throughout the country. Yeah. But again, we're tracking spending habits of baby boomers. They want RVs, they love their boats, they love their cars, they want to enjoy their lives. They don't really care where the market goes. If they're
what do you think about the Lake Tahoe area?
Love Tahoe. I've actually wanted to look at buying and building up there. Definitely a different, so like at Havasu, it's more, you have like a lot of high-end guys. So all the LA guys, a lot of builders that you and I both know from LA, they go out and they're building in Havasu. So you have a lot of high net worth. You have the workforce in Havasu is such a problem because all you have is high net worth guys going out there for recreational and building huge homes. So they're just not, they don't have enough apartments. They don't have enough affordability. So obviously going down that road for me allows you to kind of target the city and get some support from the state and to the city for building affordability and affordable homes. But like that's different because a lot of the money that's going into those, if you look at what people are storing in there overall, they're really high-end toys, super high-end toys. One guy, he's got $1 million coach in there. I have one guy has a $2 million skater in there, and a razor and a car and they just add all stuff up. But when you go to Tahoe, you got to remember who your demographic is. You could still build these, but it's going to be a little bit different. These guys may not be putting $2 million. So you can't put a $2 million 40-footer on the lake out in Tahoe, right? So I have to design that product to who my end users are going to be. But I can bring down the cost. I don't need to go as extravagant. You probably don't need to do temperature controlled, except for maybe heating. You don't need to go so hardcore on air conditioning like the desert you do. That brings down your costs. So I can create it, just making sure that I'm tracking what people's spending habits are out there. Right. And then obviously migration down to tourism. You know, what's the city generating in tourism, and I can identify what kind of asset, how deep into that asset I can build it. So again, what kind of amenities am I going to provide, you know, my end user? But yeah, so Tahoe is actually a place we've considered. I love it up there.
I used to live there for a while. Yeah,
really?
Yeah, it's beautiful.
What side?
On the Nevada side.
Nevada side.
Yeah.
You know, all of Tahoe is nice, really.
Yeah, it's just the altitude kind of bothered me a little bit for some reason. It was very dry, incredibly dry, but it was beautiful. I mean, we had a house right on the lake. The view was just incredible. So loved it.
Perfect. Well, thank you very much for having me.
My pleasure,
I really appreciate it. I really
I'm looking
do.
forward to tomorrow too. Yeah, I know.
Yeah, we have you tomorrow.
Absolutely.
You know how many people I have coming that are just excited to see you? I'm dead serious. These people are pumped, and these are my network. These guys are coming from a lot of people coming from California to see you too.
Yeah, we'll have a good time.
Yeah, so I really appreciate it.
My pleasure. Great talking to you.
Thank you, buddy.